Get out now. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, a major country warns the markets are about to crash. I'm going to show you specifically which markets they're referring to and the news that's going to drive the tape, and more importantly, how you can make money trading this information, because this is our Sunday show, the show that makes you money, which is why we like to look at the technicals, momentum, and machine positioning every Sunday to help you make more money trading and investing than you ever have. Now, before we head over and find out which specific markets are about to come crumbling down, I want to first take a look at the U.S. equity markets, because according to Goldman Sachs, in 10 days, something major is going to happen that could send the U.S. equity markets lower. And as we take a look at the key position and levels, we look at the CTAs. These are the machines that trade the markets. Now, if you're not familiar with how they work, they are price-sensitive momentum trading machines. They don't care about moving averages or anything like that. When price goes up, they buy, and when it comes down, they sell. And when they do, they move large chunks of money, which is why we care about how the machines are positioned. And right now, they're long 119 billion of global equities. This is the 81st percentile, and they were net sellers last week, even as, of course, retail investors took the market higher. And this is something important to understand, because machines, when they've made money, they start to cut their exposure and lock in their gains. This is something a lot of investors don't do. But what's coming in 10 trading days? Well, look at this. They currently estimate the buyback desk. This is 90% of S&P 500 companies are in blackout. And what this means is last week, you saw that rally, those big 3 days in the market that was all retail driven, had nothing to do with corporates, because there's another issue here. 94% are now in blackout as of Monday. And if we look at 10 B51 plans that allow corporates to purchase through their quiet period, that window closes on July 19th. Again, trend trading days before we're in total blackout. But let's look at the flows from the machines. Here you see in a flat tape, they're only buying 6 billion, and an up tape only 13 billion. They're not big buyers here, and over the next month they're seeing only 62 billion buying, and this could only be in global equity. You'll note only a mere 77 million in the S&P 500 to sell. This isn't a big number, but if there was a meaningful move down in the market, you're looking at 202 billion to sell. Here's your key levels in the short term. Keep an eye out on 53.51. You get a break of that, the machines are going to look to start cutting their exposure in a big way. And here we can look at the S&P 500. This is a graphical estimate of CTA position. You can see there are minor buyers here that are going into very extreme long positions, but if there's a catalyst that gets them to sell, whether it's a 1 or 2 standard deviation move, look for them to dump stocks very, very quickly here. Even on a global basis, where we see net buying by the CTAs, they're very long in their positioning here. And when machines get long and there's a shock to the market, they're one of the very first ones to sell, which could be a big red flag as we look ahead 10 trading days. Remember, this is something Goldman was warning about here just a week ago. And we can even look at systematic macro, which looks at CTAs, risk parity, and vol control strategies. And what do you see? Near extreme long positionings across the board. Now let's take a look at our data here, because we know the momentum on the S&P is clearly positive. The relative strength index is a 75. This thing is massively overbought. And on holiday weeks, you tend to see large traders take time away, which means watch out Monday. They could be looking to sell into that retail-driven rally that occurred in the last 3 trading days. The MACD, or moving average convergence divergence, that's positive as well. Our own momentum timer pro, if you like to trade the technicals, well, we take that to a whole new level. We aggregate all these technical signals together, run a proprietary overlay, and give you a daily momentum, a 1 month, 3 month, and 6 month window. We've got 43 consecutive daily buy signals. Now, you may remember we were stopped out of our position. Where does this go to the upside? We don't know. But at some point, there's a downside move here coming. And if you want to trade the machines, you'll notice here we have, this is our CTA Timer Pro. We look at the fast machines and the slow machines. We tell you when they're positioned and where they're moving ahead of time. Right now, we know they are indeed long this market, and in a big way. Let's take a look at the charts, because here you see that retail driven rally over the last 3 trading days, and at some point you're going to see a retouch of this 50-day moving average, because in any rally in stocks, what you'll note is it will jump above the moving averages and then eventually come back down and reconnect with them, making the 50-day the first likely place to see a market pullback. Potentially this could come in 10 days, maybe sooner, if we see the sellers start to come into this market and push back on this retail driven rally. But for the moment, what do you see? Buyers underneath here, and you see stocks taking off in a big way, and for the moment it appears nothing can stop that. But if you're wondering what we're talking about with our CTA Timer Pro and our Momentum Timer Pro, well, CTA Timer Pro, it looks at the machine positioning, and when they get to deep short, those minus 100 numbers and price rallies against them, it creates huge opportunities. And our Momentum Timer Pro, well, it is the best technical report out there, because we look at signals no one else does. When you sign up, you get the report, you get the signals, you get my opinions on the best trade. I go through every new trade and tell you what I think of it. We give you the stop loss levels. We track the trades and returns, yes, even the ones that don't work out, and we give you a weekly update on where to put your stop loss levels. Here's the best part: my buddies make you pay. We give it to you for 30 days for free, because that's how confident we are you'll make money. Let's take a look at the tech stocks, because remember, this is the biggest buyer of stocks is in the techs, and so there's some exposure here as they're in blackout. Well, this could be a danger sign for the market. Again, in overbought territory at 76 on the RSI. MACD, of course, positive cross. Momentum Timer Pro, 43 consecutive daily signals on the buy side. And look at this, on the 1 month, like the S&P, maxed out. On the 3-month window, nearly maxed out. The S&P is, and on the 6-month window, totally maxed out. Our CTA, yes, completely long, and we got you in these positions ahead of time. How about this upside target? Who knows? But downside target is that 50-day moving average, because it comes back in play every time you get a market rally here. Let's zoom out to the 1-year chart. And what do you see? The market crosses the 50-day, and there's your rally. That green line running up, reconfirms it, pulls back to the 100-day at the blue line, and then takes off again at some point. This is going to pull back. Maybe this is a blow off top. We'll see how the market handles this early next week. But if there is a warning sign, and there are many, one of them is the Russell 2000. As we see investors here cram into, of course, the biggest U.S. companies, what they're missing out on is the fact that a lot of other companies are starting to fall by the wayside, and where they go, the broad equity market follows every time. The RSI is cooling off. Now, we note that as momentum slows down, you get under 40, it starts to go negative. The MACD still got a positive cross, but probably not for much longer. Now, we made money on small caps, but as this ran out of steam, we got stopped out. Upside target unchanged, downside target unchanged. But look at the machine position. Machines are not long small caps here, and looking in a meaningful way. If price continues to fall, they become net sellers here, and that, of course, is a huge risk to the broad equity market. Let's take a look at IWM here. And we can see right there at its 1-year volume profile, sellers are dominating here. It's noted it's gotten up into the supply zone, found sellers here. They drove price down. It got back up here in the supply zone. Sellers drove it down. And now the buyers are running out of steam. If this fails to break through this volume profile, you're looking at price coming back down in here to the 187. Now, the risk to this is if we overlay the S&P 500, and you can see the relationship is very, very clear. Where small caps go, the big caps are going to follow. You notice there's this discrepancy. Here is the S&P 500 in purple rallying higher. As small caps go lower, you can see the relationship. As small caps break down, it's putting out a huge red flag that says that the broad equity market is indeed going to come down. Look for, again, some of the biggest players in this market to likely sell into the strength on Monday. Now, let's take a look at what's going on in one of the major countries as they warn that the markets are coming down. Here we have China-bound oil tankers at 2-year low and warning for bulls. Now remember, we've made a bunch of money trading oil. Our subscribers have done really well. I've shown you the data, but there is a point where everything changes, and China could be the driver that sends oil prices down. Only 86 of the tankers are indicating China as their next destination in the coming 3 months, shrinking by 5 from last week, indicating demand is down. This is the lowest weekly tally since August 2022. You're looking at 2 years of data. And the outlook for Chinese demand this half is showing signs of softness, potentially providing a headwind for rising crude oil prices. Let's take a look what's going on with crude. Now, this one we've made money on. The relative strength index, this is a 65. Momentum still building here. MACD's got a positive cross. We have 18 consecutive daily buy signals on Momentum Timer Pro, but this trade went to our CTA Timer Pro subscribers back on June 12th. They're at 5.83%. And this is our actual live stop loss levels. We raised it this weekend. We see upside target of 83.41 is the next destination, and a pullback down to 75. We'll get stopped out on a move down there, put some money in our pocket. But look at the machines are long here. So you look for a reversal in price. The machines are net sellers. You look at momentum. You're maxed out on the 1 month windows. 3 month is strong, and 6 month is strong. Strong daily counts. What this is suggesting here is the market is long, but let's take a look at where oil is likely to go here, because it's right near the recent highs. This is a very strong rally here, and we'll make a case that when it gets up to this 83 level, well, it's lights out for oil. Turn off the switch, because it means a potential sell of the market is coming. We'll give you another case for that. So if maybe you're a short seller or someone who likes to take the opposite end of the trade, take a look for oil to get up near 83 before you take any such positions. Remember, shorting the market is extremely risky, so only do so if you have the skills, knowledge, and risk tolerance to do that. But there's some warning signs that indeed oil's coming down. And for that, we look to the energy sector. Momentum here is positive. Again, relative strength index cooling off. And this is important to understand, because where the energy sector goes means that in this case, the actual oil, the commodity, is going to follow. Because what's happening is the market thinks oil is going higher, but instead energy stocks are saying demand from consumers is going down. That's the risk here. You've got a positive cross on the MACD, so momentum remains positive after 10 consecutive daily buy signals. This is something we wouldn't put a trade on, because I'm going to show you it's heading lower. There was a short-term move. Our CTA Timer Pro picked that up a little bit, but here is the bigger picture. If we look at the chart, it's very obvious what's going on with XLE. There's a problem. And where it goes, of course, that means energy in terms of the commodity oil is headed there as well. And when we zoom into the 6 month window, what do you see? Price getting rejected here right at that 6 month volume profile. So you see the stair step down. Every time buyers come in and try to take energy higher, there's sellers here in a big way. A breakdown here sends you right down to the 200-day moving average. A break out of the 200-day moving average, the downside, sends us down to 84.35. You'll notice momentum rallied here is rolling over. The MACD starting to roll over, suggesting a big drop for energy prices coming in the near term. This will send oil down. So if you're long the oil market, it's time to, again, to raise those stops. It's time to cash in on some of those gains and then look for other opportunities. And not to worry, if you're a subscriber, we'll give you all the opportunities you need, because one of them may be coming in the bond market again. Momentum's negative. The RSI is coming up off of some deep oversold territories. It's 51. MACD's got a negative cross. Now, this is one thing we traded without a stop loss. And how do you do that if you get behind? You use the signals to dollar cost average in. Our cost basis has us down 1.86%, but probably not for much longer. We've got 5 consecutive daily sell signals. This is likely to switch here in a bit. But look at our CTA Timer Pro. It pulled back. It's getting ready to make another move for our subscribers. If you want to be long the bond market, we're going to show you that trade when it hits. All you have to do is sign up. Links in the description below to get your free 30-day trial. Let's take a look at TLT here, because look at this trend line here. This is where sellers were dominating all along this dotted purple line. It broke through there, pulled back, confirmed the line, rallied up, and then what happened here, right at this 1 year line? The sellers who wanted to sell here came in a big way and just slammed bond prices down right into the trend line. And what happened? Buyers stepped in. What you're seeing here is indeed a bear trap forming. They're getting all the sellers lined up. And if this breaks out, again, you're targeting 100 to the upside here. A breakout of that, well, sky becomes the limit. You'll notice momentum pulled back and is now turning up. Even the MACD is starting to rally and pull back off of its downward trend. Opportunity here indeed in the bond market. Let's zoom into the 10-day window. You can see it came down, touched that trend line perfectly right on the 10-day volume profile, indicating buyers are sitting right there. You can look at the 30-day window. You see buyers clearly underneath here, and the 90-day window's got a breakthrough here, and then next thing you know, this thing is off to the races. Opportunity there for you in the bond market. Let's take a look at what else could be a problem as China now keeps their gold buying on hold for a second month. This was a catalyst that many investors needed to send gold higher. In the PBOC, they were unchanged at 72.8 million troy ounces at the end of last month, ending their 18-month buying spree back in May. And many people said this is what, again, drove gold prices to their highest ever. Last time they did this and reported, we saw gold prices come down. Now, many people believe that about 20 central banks will continue to expand their gold holdings, but for the moment, there is risk here. Now, back on 621, our Momentum Timer Pro subscribers, we nailed this trade for them. Here you can see we give you the data. We tell you what we think upside target, set the stop losses, and here you go. Momentum positive, RSI at 61, the MACD positive cross. You got 4 consecutive daily buy signals. Remember, last week we were down. Now we're up 1.42%. We're raising our stop loss levels. We're going to keep a hold of these gains because we're coming right back at a near-term peak, and that is obvious of some concern, particularly with China in their news that they're not buyers here. And you can see anytime gold gets up around 222 to 225, the sellers have been there. I want to hold on to some of these gains, which is what we encourage our subscribers to do. You'll notice the MACD's coming out of some oversold territory, looking to build some steam. The RSI is getting near overbought territory, suggesting there could be one big move here. If there is, well, that would be our signal to raise our stop loss levels. But we also traded GDX as well. Here you can see on the 21st, our CTA Timer Pro, they picked up a trade on GDX, and this one is in the green. Look at that, 5.41% over since 621. How about that? You want to start making some money in the markets? We show you how. Relative Strength Index at 63. MACD got that positive cross. Look at this, 15 consecutive daily sell signals. This is about to trigger for a Momentum Timer Pro subscribers on a technical basis. Upside target 3730. Let's make the case of why we think GDX is indeed going higher here. And look at this, it came in right at that 6-month volume profile. It held it strongly and is looking to go to rally mode. Let's zoom out here to the 5-day or 10-day window. And what do you see here now? Potential move. You looked at 37, and this is possibly even getting up here to 39. When it holds this as a double bottom, well, you have to respect that and look for the bulls to push this higher. Will it take gold with it? We don't know, but what we do know is our subscribers are taking advantage of this trade in a big way. And here's one we've been talking about, soybeans. This is a rare pair trade where we get signals on the same day for CTA and Momentum Timer Pro. We love it when this happens. This happens when machines, remember, deep short position, they were minus 100, and this flipped, and we were to sell max. We tell our subscribers this is what we look for on our signals, and then we got some buying signals. We bought into this on July 5th. That's up 0.62% in 2 days. Relative Strength Index 49 and rising. MACD positive cross. This is exactly the setup you're looking for, and I'll show you why for good reason. This was ripe for a turnaround. You want to make money in the markets, you got to buy low and sell high, not buy at all-time highs. And you can see when it gets down to certain levels, it has major reversals, and sometimes those things take off in a big way. Now, we were wondering if it was going to pull all the way down to the 21 range, but it's looking like it's holding right now. And what you can see, price coming off of this, suggesting a near-term rally right into $24.95, potential breakout up into the high $25 range. Let's look at the 10-day volume profile. You see buyers coming in here looking to break out on this. So if you're not a subscriber and you've been thinking about being a subscriber, opportunity still here. We just want you to see exactly how easy it is to trade these signals, the kind of information we give our subscribers. Now let's talk about the dollar, because this could be a catalyst for gold and gold miners and even the bond market as well. Here we see, of course, the dollar. One consecutive daily sell signal as a relative strength index is cooling off. The MACD has gone negative. Momentum overall has turned negative. And remember, we went short the dollar back on May 6th. We're now up 0.5% on that trade. Downside target for the dollar, 200-day moving average. And here we can see this is opportunity. We think the market's going to shift on the dollar in a pretty big way here. In the near term, is set up a Fed rate cut. Here you can see the 10-day volume profile. Sellers are right there. Zoom out to the 30-day. Sellers are right there. 90-day, my guess is there they are. Look at over the last 90 days. You break down here, that's your catalyst for a weaker dollar, sends it down to the 200-day moving average. Could be a boost for the commodity market in a meaningful way. But here you have it, opportunity in the market in a big way. You don't have to look at the broad U.S. equity market to make money, but watch oil, watch gold. When China stops buying, it sets up potentially large moves down. With that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.